It's a big, noisy universe of stocks out there. Welcome to Goodbye or Goodbye. Our goal to help cut through that noise to navigate the best moves for your portfolio. Today, we're taking a look into the growth story of two big players in the S&P 500. I'm here with Lou Basenese, Public Ventures President and Chief Market Strategist. And let's get to your buy stock, Lou. Thank you so much for being here.
Thanks for having me.
Let's dive right into it, right? And this is a stock we've talked a lot about as a growth story that we've seen over the last year. It's Eli Lilly, and obviously the growth is reflected in what we've seen from the stock price. But
it's
walk
about
us
80% in the last year.
Yeah, so walk us through why you still think it's a good
let me
buy
just disclose,
here.
I don't know everyone's personal financial situation, so you got to do your own research on this. But I think this is one of those classic examples of a tech stock or a science stock that's in the early innings of growth. I mean, if you think back to the smartphone boom or NVIDIA last year with AI, you want to be positioned in the early stages of growth. And if we look at just the numbers, we got about 3% of the U.S. population that has a prescription to a GLP-1 weight loss drug. That's going to go to 7 to 10% very quickly. And then there's about 40% of the U.S. population that's considered obese. So you have a market that it can grow for a long period of time, which I think is why you want to get in, consider getting in when you're in the early stages of that.
Right, even after the gains that we've seen.
Right.
But it's not just the GLP-1s. Talk to me about the bigger story here.
Yeah, so I think GLP-1s is going to be the driver here. There's multifaceted momentum in that story. You're seeing people, this is one of those drugs that has visible signs that it's working, right? So it's got built-in advertising. If you're using a GLP-1, you lose weight, your friends notice. They started,
what have you been doing? What can I do?
That leads to greater sales. That leads to greater insurance coverage. So if you look at the data for this upcoming year, last year there was about 25% of employers that covered GLP-1s. This year it's going to go to about 45%. So it's just a nice positive feedback loop that's really going to feed Eli Lilly's sales growth.
Cool. And then let's talk about the pipeline as well. For
I think this is really important for investors to understand because there's another player in this race. That's Novo Nordisk with Ozempic and Wegovy. There's two differentiating factors, right? Mounjaro works better than Ozempic in a head-to-head comparison. So anywhere from 4 to 12 pounds greater weight loss on average. But then they also have in their pipeline a phase 2 molecule that would be a small molecule, so a pill, an oral as opposed to an injectable that could really lower the cost and then lead to greater sales and a better competitive position.
Right, that's really the next thing that people are looking for. As always, we like to ask people what the risk would be when we're looking at this. And, you know, there already have been some reports of some negative side effects for the GLP-1.
Yeah, and I think that's always the worry with any types of drugs. And if we look in the weight loss market, I don't know if you remember back in the early 90s, Fen was this miracle weight loss drug that was on the market for about 5 or 6 years before you had to pull it. CAR-Ts were all the rage when the first one was approved in 2017. And then just in the recent months, we had the FDA come out with warnings because they're causing secondary cancer. So I think that's what you have to contend with here. Could 3, 4, 5 years down the road, the FDA and the science prove out that there's some negative side effects that are just not particularly favorable, and that's really the biggest risk I see from a company-specific space.
I'm also curious, though, how much you talked about that the coverage percentages are going up, but how much are you concerned about coverage of these types of drugs? Because it has been a little slow going.
Yeah, I think that's always going to be a driver, a bureaucratic issue to get through. But the other thing you have to realize too, there's price discrepancies. So people that want these drugs are going to find ways to get them. If you look now in Mexico, a cost is about $200-300 versus over $1,000. So you're going to see the competitive forces of the market come in line, I think, because there's so much demand.
All right. So in a very different industry, let's talk about the growth stock that you are saying goodbye to here. And that's Tesla. And I have to admit here, Lou, we've had quite a few people say they do not want to get involved with Tesla as of late. So I don't know what that says, that the goodbye consensus is kind of forming around it. But let's go through your case here. Overpriced and overhyped, you say.
Look, I never want to bet against and go short against Elon Musk. I think a lot of people want to say goodbye to him. But right now, we're looking at a maturing market. This stock, by any metric, is overpriced. I mean, if you look at it, take the market cap and divide it by the number of cars that Tesla produces, it's about 300,000 per car. If you compare that to the established automakers, they're valued at about 8,000 to 32,000. So it's wildly overpriced on the fundamentals of the business, which has always been the case. But now, I mentioned here too that we're entering the maturing stage of this market, right? The growth is slowing down, and I think that's the biggest concern. Premium prices are fine when the growth is going to continue. When it starts to slow down, that's when you have to get concerned.
Well, and then that feeds into another point that you have, which is that more competitive market, which has been affecting the margins for the company.
And if there's one metric to look at in this EV market, in particular to Tesla, it's this here, because this is how you're going to be gauged. When you have stable margins, but you're going into a more mature market. It's predictable, right? You know what your profits are going to be. But as you can see here, Tesla's margins are all over the place, and in the last quarter they got cut in half. So there's no confidence that these margins are going to be maintained as the volumes grow and leads to a profitable bottom line.
Right, and Elon Musk has definitely sort of tried to temper expectations for
the chart kind of looks
expansion.
like his personality, a little bit erratic sometimes.
And then finally, maybe that speaks to point number 3, which is that there's less investor confidence.
There really is, and on the last call, he said they were going to be they were less transparent on providing growth guidance, and investors don't like that at all. I mean, we saw that with Tim Cook at Apple when he removed a couple years ago during COVID the growth guidance. People were not happy about that. Investors will deal with uncertainty as long as you're communicating those uncertainties clearly, and that's just not what's happening here. So.
All right, as always, on the flip side, we like to look at what could go right for Tesla. And, this speaks to the AI story is really for the bulls. When you look at their long-term investing case, this is what they're pricing in. This is how they're making their valuation.
Agree. Elon Musk likes to promise a lot. He hasn't always been on time or on budget for delivering, but if
or
he's
done it at
or
all,
done it
in
all,
some
right?
cases.
Fully self-driving cars, anyone? But I think this is the risk here. I will give him credit. He is one of the best public company CEOs for casting a vision and bringing together a loyal fan base of customers and investors that buy into that and that will support him as he endeavors to make it happen.
And just quickly, we did a little disclosure at the top, but do you own Eli Lilly and are you short Tesla?
So no disclosures on that, not short,
position.
long, no firm ownership or anything. So.
Okay, good to know. All right, we are going to summarize your position here on these guys. Now, you're telling investors, buy Eli Lilly. You like the potential growth and momentum from those diabetes and weight loss drugs. On the other side, you say, avoid Tesla, overpriced, experiencing decelerated growth and lack of guidance. Yeah. Lou, thank you so much.
You summed it up better than me.
Appreciate it. That'll do it for the latest installment of Goodbye or Goodbye.